Hello, and welcome to Planning for Profits, originally presented at Action Flow's Peace and Profits Retreat 2023. My name is Rick Phelps, and I'm a principal at Synchronous Solutions. So, Synchronous Solutions, what makes us tick? Well, we like working with fabricating businesses because our why is there's a better way. Simplify your business, and you can create an asset that's worth far more. How we do that is we guide, we coach, and we mentor business owners in the building of businesses that are highly profitable and a joy to do business with, and an exceptional place to work. How we do that and what we do is we provide a custom mix of consulting and coaching services to accelerate our clients' journey from where they are today to where they want to be tomorrow. We do that by implementing the Synchronous Flow operating system. It is a comprehensive set of systems and structures that are required to successfully grow your fabricating business. So, the topic of today is planning for profits. How many people actually plan for profits? This presentation was presented on April 26th. How many of you know, I asked the audience, within 1% what your net profit would be for the month of April? There were two people in the crowd that raised their hands. They were both clients of ours. Fact of the matter is, when you plan for profits, you should know every day of the month where your profits stand for the month and not have to wait 2 or more weeks to find out what your accountant says you did. Similarly, how many of you just hope for profits and don't even plan at all? And you just sitting there and waiting, and hope is not a strategy. Do not just pray for your results. Plan for the results. Who creates an annual budget? Who manages by it? Does budgeting create a profit? Does it guarantee a profit? What's an acceptable profit? How do you make a profit? These are all questions that we want to address as we go forward in this presentation today. So, the goal of every business is to make more money now and in the future. And if you're going to make money, well, you're going to have to empty that monthly bucket of bills that you have, right? Every month, your business requires a certain amount of money to pay your labor, pay your overhead, pay your insurance, pay for materials, all those kind of things. Those are your monthly bills. You need to make enough money to make sure that happens. And too many businesses, far too many businesses, 2 or so, sometimes more weeks into the next month, the accountant, after examining that bucket of bills and the money that flowed through the system, will say, well, I got bad news for you. You lost money last month, which might get you thinking, where did I leave that money? Do I have a leak in my OE bucket? And the reality is, chances are, yeah, you do have a leak. Almost all businesses have small leaks in the operating expense bucket, and you should address those. However, no company can cost save their way to prosperity. It should not be your primary objective unless you actually cannot pay your bills, in which case there's nothing more important. Right? Instead of focusing on expenses, think instead about opening the tap, getting more business flowing through your business. Overflow that monthly bucket of money into your net profit bucket. Right? For that to happen, well, not all money that comes in revenue is yours, right? Every one of you has to pay for your materials. You pay your suppliers. And so immediately a certain portion of that revenue is siphoned off and goes to your suppliers. What's remaining, we call throughput dollars. And that's shown by the dollars T, which is how we show or express throughput dollars in a shorthand form. Okay? Typically, across a wide range of industries and markets, material costs tend to average somewhere around the 35% mark, leaving 65% of the revenue to be the throughput dollars that stays in your business. So 35% goes outside to suppliers, 65% or so stays in your business. And if you think about it, your monthly bucket of bills, you know how big that is. And you should be able to decide how much profit you want. And if you add the bucket of bills plus the bucket of profit you want every month, you can get what is equal to throughput dollars, right? The money flowing into your bucket should be equal to your bills plus your net profit desired. And so take a look out into the marketplace, survey the markets, decide what are you going to go after, what marketing are going to do to bring more revenue into your business. Control your inventory expenses. Don't waste money. Don't create needless remnants. Make sure your sales force is consuming the remnants. And then calculate your target throughput dollars for the month. And if we can do it for the month, right? And again, the month is your monthly bucket of bills plus your net profit you want to make each month. If you can do it for a month, you can do it for a day, right? And you can say, well, a monthly bucket is made up of a whole bunch of daily buckets, right? And at some point, you're going to hit a point where that monthly bucket of bills is paid off. And here we're showing that 18 days into the month, the monthly bills have all been paid. All your labor, all your payroll, and so on has been covered. And the very next day, the 19th day and the 20th day, they flow into your net profit bucket, as do the 21st and the 22nd days of the month as well. And so knowing how big your buckets are, you can figure out how big your daily buckets are, and you can actually plan and schedule your profits. Knowing what you need to have flowing through your business, you can examine what's impeding the flow and make some improvements, right? So instead of 18 days to fill the bucket of OE, you can do it in 16 days or 15 days. And so it is very possible in every one of the fabricating shops to determine how many throughput dollars you need to make your monthly nut, your monthly bucket full of bills, and how much more do you want for net profit. And Action Flow makes it very easy. The throughput dollars are automatically calculated for you in the Action Flow software. Right. So this is how you plan for profits now. And you might take a few minutes before you move on to collect your thoughts and decide what actions you're going to take to implement this now. And if you have questions, I can be reached at Synchronous Flow or synchronoussolutions.com. All right. Let's shift gears though. Making money and planning for profits in the present, in a month at a time, it's fairly straightforward. We just went through that. Making money in the future, that's a little more tricky. And this is where it's really important that you understand these concepts and how you can ensure that you're going to make money in the future as well as the present. And so it has to deal with knowing where you're going. If you want to make more money and ensure the profitability of business in the future, you need to know what the future looks like. As Lewis Carroll said, if you don't know where you're going, any road will take you there. I happen to be a New Yorker and a fan of Yogi Berra, and he said, when you come to a fork in the road, take it. So by all means, pick up the fork and move forward. That's the key. So making more money in the future means you got to think about what does the future look like? And Stephen Covey in his 7 Habits of Highly Effective People, number 2 was start with the end in mind. And the reason you start with the end in mind is because all things in this world are created twice, once in your mind and once in the physical world. So you need to be able to visualize what does your business look in the future. Think about it, put effort into it, plan it, all right? And so we like to start our clients off thinking about what does it look like when my business is finished, right? And by finished, I mean it's sellable, it's transferable to your next of kin, it is able to give you passive income if you want to keep the business. But at some point, as an owner of the business, you should be thinking about what does it take? How do I exit? What's my plan to have this thing complete so I can go on and enjoy life? Because business, the reason we start businesses is not to consume our lives, but to fund our lives. All right. So in this particular example, we've chosen that our finished business is going to be 48 million in revenue, 15% return on sales. And we think that's going to take us 110 employees. We can figure out what the organizational chart looks like. You can see from the map that we're thinking about having a central hub and spoke design where our central region feeds, 2 satellite offices in neighboring cities. And we've thought about it, and the markets we want to participate in are the commercial market at 20%, kitchen and bath at 40%, retail at 15%, builder at 25%. So with that picture in mind, we can start getting a really good picture of what our future looks like. And if we're just a $3 million company today, we can, looking all the way out to 48 million, that's got a bit of a stretch. So we might say, okay, in 3 years' time, our next milestone is to hit $6 million in revenue, right? Now we're pulling it back from maybe a decade or two out into the future to 3 years into the future and describing what that milestone looks like. And maybe it's just you've captured that core central territory, right? Revenue is at 6 million. You still want your return on sales at 15%. You're at 30 employees in the same markets and the same percentages. Your organizational structure is a lot smaller at 6 million than it will be at 48 million. And we can actually rough in your future budget, right? What can we afford? What does this thing look like? So we had 6 million in revenue. That would mean the throughput dollars at 65% is 3.9 million throughput dollars and 2.1 million going out to our suppliers. We translate that into a monthly basis. That's 500,000 in revenue, 325,000 in throughput dollars, 175,000 every month to our suppliers. If we want a 15% return on sales, that's 75,000. 75,000 is 15% of 500,000. That leaves us, do the math, 250,000 is the size of our monthly bucket of bills. That's as big as it can get. If it gets bigger than that, then you're not going to make 15%. So knowing this is a really important insight into your business, right? So with that picture in mind, now we can ask what will the production processes look like? What equipment will you need? What's the team size? How many direct laborers? How many sales folks? What will the support staff look like? What's that team look like? You can sit here and you can visualize and plan and build that. And we help our clients do this in our assessments, right? And so as you're building your business as a business owner, you go from maybe you started and you really started hitting things at $1 million. Things started really cooking for you. And that's usually the time that business owners recognize they need to build a business, because the job, while it started out being a lot of fun, all of a sudden you find yourself, working at 10 o'clock, 11 o'clock at night doing the invoices, or heaven forbid, accounts receivable, trying to collect the money that's owed you. And it becomes an onerous situation, not a joyful business. The business that you started because you didn't want to work for somebody else becomes a tyrant, right? You're your own worst enemy. You're spending more time in your business than you ever did, and the joy is disappearing. And so somewhere around 3 million, you start realizing the business becomes too large just for you to manage everybody. When you start out, there's a couple of people and you know everybody and you all work together and everything works really well. Somewhere around 12 to 15 employees, that starts to fall apart. And you realize the business has become too large to manage alone. So you need to hire your first manager, right? You keep growing at 5 million, you're up to the point where you need additional managers, right? And the business keeps growing, the complexity keeps growing. And if you don't think about what you're growing into, you will take a sad journey down whatever path opens up to you. You'll buy equipment you don't need. You'll hire people you wish you hadn't. All kinds of mistakes are made if you don't think about and plan on making a profit every year. Right. So the question is, and this is what we're discussing, how do you assemble a profitable business? How do you put together the people, the equipment, the software, the benefits, the buildings, and so on, into a business that runs efficiently, effectively, and most importantly, profitably, right? And well, I've said 15% as a target. What should your target profit be? Well, I'm going to rely on Greg Crabtree. He's the author of the book, Simple Numbers, Straight Talk, Big Profits. This is a book we use with a lot of our clients as we're helping them understand and grow their business. And the first 4 chapters of this book, you ought to definitely read. You should read the rest of the book too, but the first 4 basically describe the journey across the Badlands, and you'll understand when you read the book what that means. And what Greg says, and I 100% agree with him, is that if you're making less than 5% net profit, your business is on life support, all right? If you're at 5% to 10%, your business is slowly dying. You may not think so, but it is, right? You need to be making at least 10%. And if you're from 10 to 15%, business is good. If you're better than that, business is great. And we have clients that are in the upper 20% return on sales, and they're outstanding, right? When you get above 15%, though, people start looking at your business saying, wow, I believe I could steal some of their business from them by undercutting. And they're generally right. And so we're targeting, for our future state to be 15% because we want business to be good and right on the border of great. And that's a good place to be. So that's why I chose 15%. Right? So many, many businesses, in fact, most of the ones that we encounter, do not plan for profit. And this is a story we have witnessed over and over again in the stone fabricating industry and virtually every other industry we've worked with. All right. We don't plan for profits. And so we start out on our growth journey and we grow and we spend some money on something. Maybe we buy some equipment, we buy some additional people, and we keep growing. And then we spend some more money. Maybe we hire some people for the office. We hire an assistant. Maybe, I take it, my accountant says I need a good tax break. So, I buy myself a great big shiny new truck so I don't have to pay taxes. And we grow some more and we spend some more and we grow some more, and we spend some more. And notice what's happening. We are growing ourselves out of our profit margin. And at some point, you better stop digging and ask for help, because you're in the red here. And we have worked with a lot of companies that have grown themselves into this deficit. And remember, when you're in the red, your business is dying. Right? This is a very unhealthy place to be. And the reason it's dying is because you don't have enough money to reinvest in the business, to replace your equipment, to maintain competitive wages. All of that disappears when you're below 5%. So if you find yourself in this situation, quit digging, right? Instead, don't get yourself in this situation by planning for profits, all right? So if 6 million is our target, then we can look at as we grow our revenue, right? And we want to maintain our profit. We want to stay in the green. And so we're going to grow, then we're going to invest some money. And what's the difference between invest and spend? On the prior slide, I referred to it as spending money, right? Well, the difference between spending money and investing money is that when you invest money, you expect a return, right? And that means you're going to not keep losing, right? So spending money and not getting a return caused your profit margin to shrink and shrink and shrink and shrink. When we invest, we do it wisely. We know what we can afford. We know what we can't afford. And we go after the proper investments in your business, and you keep growing. And most importantly, you keep in the green. So we help our clients build a plan that keeps the business in the green so that you're never at risk of losing control of the business. Invest and grow, and go right on out, and bang, you are at 6 million and you're still at 10 to 15% net profit. A huge difference than growing your business to 6 million and only being at 8 or 9 or 5 or 4%, right? And the accumulated difference in profits in your business is what can cause your business to either thrive or to sink, right? Very important. So this is how you plan for profits in the future. You might want to take a few minutes and think about, what does your future hold for you? What do you want your business to grow to? And would you like help getting that analysis done? If so, reach out. We'd be glad to help you. This is our passion, to help businesses grow using our synchronous flow operating system. Again, a set of systems and structures, including organizational structures and the production processes and financial processes and marketing processes and sales systems that allow your business to become extremely successful fabricating shop. And to do that, we help you understand where you are today in clear terms, in terms of what you're good at and what you're lagging in the industry in, and then mapping out what your next milestone is and what is the roadmap. How do we get you, and how do you get your business from where you are today to where you want to be in the future? Right? Thank you. I hope you found this useful. And again, Action Flow has the tools you need to do the throughput analysis in your business. If you need help with that, we would be delighted to talk to you and help you do that. I'm Rick Phelps with Synchronous Solutions.